Hey everybody, Kyle, not your average finance guy. Well, I had a question the other day. Someone's buying a house and they said, what would you do? Would you do a 15-year mortgage or a 30-year mortgage? There's obviously pros and cons to both of them, so kind of wanted to go through and figured I could help them out. Maybe I help you out too. So what they're looking at is with their down payment and everything else, they're looking at about a $300,000 mortgage, give or take. So I just kind of ran the numbers with that. So um, they got quoted for a 15-year mortgage at 5.25%. 30-year mortgage, they got quoted at 6%. So that is basically the big kicker here. Obviously, this is paid off a lot quicker. That's 30 years. But your payment on a 15-year is 2411, and your payment on a 30-year is 1798. So about a $600 difference right there. So you're always going to have your real estate taxes. You're always going to have to pay insurance. So if you ever hear anyone talking about the PITI, that's principal, interest, taxes, and insurance. And if you got HOA fees, you got to add that in there too. So, but rule of thumb, your living expenses shouldn't equal more than 4 times your pay. So this times 4 is roughly $12,500. So whoever's paying in your monthly income, you should have take home pay of at least $12,500 to be able to live comfortably. If it gets much more than that, you're going to be scrimping and saving, and it might be too tight. So good rule of thumb there. And over here, it's you need to be bringing in at least $10,000. Now, if you're bringing in well in excess of 12.5, let's look at the numbers. I mean, your total payments over here on the 15-year is going to be $434,093. Remember, a $300,000 mortgage. So total interest you're paying on this is you have to give the bank $134,000 over 15 years for you to borrow money. But if you look at this on the 30-year, you're paying them $347,000 to borrow money for 30 years. Okay, even though your payment is lower, that by the end of that 30 years, you're paying them a lot more interest, and they're getting a lot of it up front. So if you could, obviously the 15-year is way better way to go. It gets everything you're paid off in 15. Obviously, way less interest paid to the bank as well. One thing I always like to think about too, though, is I'm in the middle. I could probably do that, but I don't know if I want to. What happens when life gets in the way and you need a little extra cash? You are locked into this payment for 15 years. If you go with this payment around the $2,500 payment, you could do that and you could make the difference. So what if you make the difference, and which is $613 a month? So let's say I went with a 30-year mortgage, but I'm just going to make this payment, but then I always have something comes up and I can't quite make it. I only have to make 25 or 2,500. Little peace of mind. Maybe you won't get locked into something. So if you think about it that way, which I like that too. So if you pay an extra $613 a month, the same as the 15-year, your total payments now, your total interest is $170,000, way less than the $347, but still more than your 15,000 or your 15-year. Sorry. So if you just went with the 30-year and made the same payments you did as a 15-year, it's still going to take you 195 months to pay it off. It's going to take a total of 16 years, 4 months. So another year and 4 months. It's going to cost you a little bit more money because of this interest rate. They always give you a lower interest rate if you go with the cheaper or the lower time constraints too. So it's something to think about. If you want to get out of debt super quick, and Dave Ramsey's and nothing but the 15-year, yeah, but you don't want to get so strapped in that you're married to your mortgage either. You got to live, I think. So I tend to go more towards the 30-year, and then I would probably, in my situation where I'm at right now, I got kids, costing me money everywhere you look. So I would probably go with the cheaper route and try to make the extra payments. Maybe you can make more than that. If you just make more payments to this, you can get paid it off quicker, and go that route. But even just equaling payments, it only costs you another year, 4 months, a couple more. It's a kind of a happy medium for me. But everyone's different. I get that. So just kind of wanted to throw that out there and something to think about if you're thinking about buying a house and going between a 15 or 30-year mortgage. Hope this helps. Thanks.